The time has come for policy to adjust. With that sentence, Jerome Powell sent the crypto market ripping this morning. We're going to be discussing the latest from his speech in Jackson Hole, how the markets are reacting, and what we think the ramifications will be in the weeks and months ahead. That and much more today on Money Never Sleeps. That may be my best intro ever. Ramifications. That was great. Okay. Thanks for joining us today on Money Never Sleeps. As we get going, do us a favor, hit that like button, subscribe to the channel, and remember that nothing Kevin or I say is financial advice. So please do your own research. Kev, the Jackson Hole speech from Jerome Powell was highly anticipated, and it would appear that the markets got what they wanted. Him laying out there in really there's no question anymore. We're getting a rate cut in September. Now what remains is how big and what is it going to look like in the meetings following that. We're going to have the September meeting on the 18th, no meeting in October, and then they meet again beginning of November and the middle of December. So we will have 3 more FOMC meetings this year. I'm anticipating that means 3 rate cuts. The size of those dictated by the incoming data. So the markets are reacting very positively. Bitcoin broke above 63K. Many other crypto tokens are seeing, their highest levels in the last few weeks since the, bloody Sunday in the yen carry trade. We have TradFi giving back some of their earnings from earlier, less than a point increase for the NASDAQ. A few of the NASDAQ, Magnificent Seven have turned red on the day. But what are you seeing in the markets? I know that you're still bearish. I've seen some bears capitulate. I've seen some bulls like myself take some victory laps. So where are you at with things, and how soon do you think the market's going to dump?
Okay, so I am very happy with everything that's kind of playing out. I think the one question a lot of people aren't necessarily asking is what made these sons of bitches finally decide, hey, rate cut regardless. It's probably the labor market, right? I think that's a really good thing that both you could logically say is the reason why they're probably going to be pushing forth for a rate cut. But also it's the thing where it's like, well, we've got a lot of revisions in the labor market in the past year, and none of them have been great. So I think that, and Paul even said this in the speech today, that, any further, downside to the labor market itself would not be within their guidelines or their expectations, right? So anything that gets worse in the labor market, that'd be worst case scenario. So I think they're trying to front run this a little bit. I think they're far too late at this point. But why is this important? Because you mentioned that the yen carry trade is still on. People were idiots after that entire unwind happened. JP Morgan says, oh yeah, 75% of it, the carry trades, it's done with. No, it's not. Everyone went back into the yen because the yen got saved at 141, and people are still using that leverage to throw in the tech stocks. That's why Nvidia bounced 40-something% from that low on August 5th. That's why Apple bounced after Warren Buffett dumped a shit ton of shares. That's why all of these tech stocks, the ones that pretty much inflated this market to the heights, are still at pretty much all-time highs. And that's why the S&P is almost at all-time highs too. The yen carry trade did not unwind completely. Now what we're going to see is the failure of institutions. Now the question is, why is this important, and why does this relate to what happened at Jackson Hole? We know we're going to get rate cuts, right? So now we have the Bank of Japan, which is, I don't know, they're trying to put out a fire with gasoline at this point. And they're trying to make sure that...
Feels like a losing strategy.
Yeah, and they're fucking doing a great job at it. It's so bad in Japan that they have Japanese bonds, they have equities, and they have yen, and they are trying to control the price of all three without hurting one or the other. Pick two, and the last one gets screwed over. That's pretty much the scenario that's going to happen. But because now we're cutting rates in the U.S., what happens after we cut rates? We start to see the equities fall. And now that the rates are going up in Japan, the people that are borrowing the yen, they're putting it into the equity market. What happens if the equity market in the U.S. starts dumping? Well, that just means that the entire trade is going to absolutely unwind. You're going to start seeing people flow directly into U.S. treasuries, into bonds, any type of guaranteed percentage rate for maybe short term, say 1 to 2 years. I think that is going to increase significantly. Maybe that's what causes the yield to go back to being positive, the 10 to 2 year. It's going to be very interesting to see how that plays out. But the central banks have made their plays. We're seeing right now. I mean, I'm just going to pull this up because I'm already talking about it. We're looking at the Japanese yen, and it's getting stronger on the day because the dollar is weakening because we're getting rate cuts, and it just means that the dollar is not going to be as strong. Now, this is your level right here. We're going into Monday. Japanese markets are closed right now, but the yen is still open. You get below here in the next few days, that unwind is going to get really freaking nasty. I'm serious. I think that, I mean, look at this. We're 1 day away from a death cross in the yen because it's just getting stronger and stronger against the dollar. And if it gets to this level and they're not able to support it, or if you intervene and it doesn't work out, they're in a lot of trouble with a lot of those trades. And why is this important? What happens next week? We have an Nvidia, one of the biggest earnings that everyone's always anticipating. The weight of that in the S&P is absolutely astronomical. If they just barely miss or they just have a bad outlook for the future, who's to say that this thing doesn't just tumble, right? Because all that money from the yen was flowing into those tech stocks. So if we start to see that and we see the rate of return start to diminish and we start seeing 5%, 8%, even 2-3% per day going down for Nvidia following that, you're going to see a huge unwind because people have to move that money out. Otherwise, they're going to start getting those margin calls. It's going to be a very fun week. So to answer your question, when do I think it starts to dump? I think it starts to dump after Nvidia earnings, and I think that we get the major dump probably second week of September, closer to that rate cut, and that's when we could potentially be in a major waterfall, cascading downturn in the market.
Yeah, I go back and forth on my thoughts around a potential crash after the rate cut, because at this point, everyone has heard this theory. Like, we are not, I feel like we were some of the first people talking about it, at least on Twitter, months and months and months ago. But at this point, everyone's heard about it, right? Like, accounts who are far bigger than us have been talking about this. Is there anticipation there? Are people banking on that? Is that why there's still so much money in money market accounts? So if we do see that dump, is it a fairly quick recovery, or does it stay down there for longer? The housing market is still looking, problematic, but I'm still sticking to my thesis that this bull market for crypto is nothing to do with retail and is fully institutionally driven. With rates coming down, are institutions more likely to borrow money? Will some of that flow into some of these crypto ETFs? These are some of the questions I think you have to answer and use to form your thesis personally for how you're trading things. I'm still holding my long-term positions. I've done a couple little scalp trades here and there, which is not usual for me, but I saw an opportunity. So I did it and, made a little bit of money, nothing life-changing, obviously, but it's, you have to think, okay, do I continue to sit on my hands, or do I take some profit here and look to buy in a little bit lower? I know you're fully waiting to buy in lower. That's not my style. So I think, we have you and I have different views on things right now, which I think is good. Because we want to have differing opinions. We want people who view our show to have differing, ways of looking at things. So that's kind of where I'm at. Is I'm not doing much in equities right now. I have my long-term positions there. I don't want to take any more, capital gains taxes with that. But is there, do I just wait for more buy opportunities in crypto? And I think that is my best bet at this point. Is I'm just going to hold and look to buy dips if and when we get them.
Yeah, and I honestly think that isn't the worst strategy. Obviously, I'm worst case scenario, right? I've been worst case scenario for 2.5 years. It's because I do believe that it's going to be so fast when it does happen that a lot of people are unfortunately going to be shut out of their accounts. They're not going to be able to offload at a certain price. If they do market orders, you're going to meet whatever market is willing to buy in that level. And that means you can get a very different price than what you're looking at when you go to sell. That being said, I do want to pull up this one thing I did see on Twitter. And again,
one thing I will say with a high level of confidence, if you are just now considering getting into leverage trading, just don't do it. Just don't. Okay. Whether it's going short or long, please don't overextend yourself with leverage trading, because so many people are going to get overly confident right now and they could get absolutely wrecked. So just please bear that in mind.
And that's why I wanted to bring this up right now. It's a perfect segue. Retail investors' net purchase of U.S. equities. This is within the month of August. Look at this straight up from the yen carry trade. These fuckers, these retail investors, just started buying like crazy.
I mean, they made a good buy at this point. Like everything,
100%,
everything's
right? But are they getting in to trade this, or are they getting in thinking that, oh, rates are coming down? This is going to be a ride to the upside? Who's getting out of the market? Like, these are things that we kind of have to, weigh in our minds back and forth. Um, this isn't necessarily the best thing you want to see, because this tells me that distribution was happening towards that top level of a lot of the equities, especially when we look at some of those major trend lines like Nvidia. Like, we can pull up Nvidia right now just to take a look at that. Nvidia is still at that trend line that we were talking about in the show, so that's held up fairly well. Let me see if I get this up here. You called it out. I'd made a trade on it earlier that day, and you can see that still finding resistance right around here. So even if they're buying early in the month of August, 100%, you're making a lot of money.
I'm having a good show. I'm going to pat myself on the back for calling out a trend line. Like, and I give you credit for teaching me some of this stuff. Kev, a year ago when we were first starting doing the show, I wouldn't have known what the fuck I was looking at, but your boy's learning a little bit.
I'm proud of you. I hope everyone that's watching is also learning too, because it's very easy. And again, I know I've been bearish for the fucking longest. If I was bullish, could I have made money? 100%. Did I make some money being bullish at some points during this entire time? 100%. But I'm also just trying to make sure that I don't get fucked in this market where I'm holding something that I think is going to keep going up, and just there's no chance. Not because, I don't know, any news related article or something that comes out that just kind of fucks up the TA of it. It's more so just the monetary system is what I've been basing off the past year or so. What happens when liquidity runs out? What happens when there is liquidity out there, but it's unwilling to move into, equity markets? And what happens when rate cuts get to the point where you're seeing some countries raise rates and some that are cutting? And why are they doing that at this specific time? It all comes back to the monetary system and how debt markets work. And that's pretty much the reasoning for, why I continue to think that we're going to see further downside. Now, looking at this chart right here with NVIDIA, this is what I wanted to bring up. We have 5 days right here. You can see it right in the corner. 5 days, next earnings report, and you're right on the trend line. So either this thing breaks to the upside, right? Obviously, it's possible, or it repeats history and it's found rejection here, here, here. I mean, if NVIDIA has a bad earnings call or just misses earnings, or forward guidance is bad, let's take a look at where we are. We're at 96 and 98 on the daily stochastic RSI. You might ride this for the next few days, but once earnings come out, I'm sure you probably see some major volatility. The one thing I will say that's kind of odd is we haven't seen Jensen Huang or any NVIDIA insiders kind of sell off in this past few weeks or so, probably the past week and a half. I would have assumed that with the price being so elevated, you might see some more coming in, more sell orders coming in. Maybe we do, and they're just the 13F filings are a little bit late. But looking at NVIDIA, obviously this is just showing that there is major resistance up here on the daily stochastic RSI. And I do think that there is a lot of room to the downside, which kind of plays in with how people are betting against short volatility. And they're also betting on a bullish market with rate cuts. Now, I do want to show another chart that I'm seeing on Twitter, because again, Twitter is filled with information. If you know where to look for it. And this is just a patterns chart, and I'm sure you're going to love this one too. This is just patterns that we're seeing across the broad TradFi equity market with some of the top stocks and indexes. We're seeing very bearish patterns all across. We got Amazon putting in a very similar thing like NVIDIA. We got Apple, which we know Apple is, in my opinion, and I'm just looking at it, and just from people who are selling it, seems bearish, but for some reason we got all those.
Apple just announced a new iPhone and like other stuff coming out. I'm like, who the fuck is buying this right now? Like, who is running out to buy a new iPhone for $1,000 plus at this point? Like, it doesn't make a damn bit of sense.
I mean, what are you gonna do? Put a fucking sixth camera in the charge hole? Like, I don't know what you can really do at this point. Like, you didn't innovate that well with the Vision Pro. Maybe just like take a year off here, relax. I think people will still like buy Apple products if they have money. But that might be a problem too. But across the board, we're looking at these major, and these are the tops of all these stocks. These are all bearish patterns that we've seen in the past, month or so. It's not a good sign when you're getting rate cuts. just is what it is. So just keep that in mind. You know, for what it's worth, I think that this is bearish across the board. The S&P is a double top. I think that going into NVIDIA earnings, we could still see us touch that double top. We could go, 56. I literally think it's 56.66. The guy Fernando on Twitter, who I follow, I retweet a bunch of his shit. He's saying that we're going to get a double top. I could see us getting a double top, but if we get that double top and we get rejected from that, I would absolutely be shitting my pants for NVIDIA earnings. That's just my opinion. I would probably not even make any trades that day, and that's me being a bear too.
Can you go back to the NVIDIA chart real quick?
Yeah, let me pull that up.
I'm just curious where we think the range of outcomes is. Like if earnings are good, I think we go 150 new all-time high. And then if earnings are not good, is that the 50 there?
This is the 50 here. Let me get rid of some of these.
What's that 50 at right about now?
50 right now is sitting at about 116. So from where we currently are, what is that? Like 8% or something like that.
Yeah. So I think
9%.
Yeah, so that's where I think if earnings are a miss, I think it goes down to the 50, and if earnings come back positive, I think we go to 150.
I'm going to make a ballsy statement. I think that we break the 50 moving average and we find support either on 96 or 107. That would just be my assumption because of the yen carry trade. It could go further than that. It could go to the 200, but I'm not saying it's going to go there in one session, right? That'd be fucking idiotic. It could happen though. I'm not going to say it's not going to happen. It could happen, but I think it's very possible with how much money has been being pumped into NVIDIA. That's yen, and say Monday morning the yen is trading at 139 to $1. There is going to be a lot of fucking fear in that market. They're going to be offloading a lot of equities. I think the Bank of Japan and the nation of Japan is going to have a bad Monday morning. So Sunday night, keep an eye on Asia for that. But this is going to be one that's going to change the face of the market, in my opinion. I think this could cause a lot of disruption in the S&P. And, we're very big on the VIX. We talk about the VIX all the time. You used to talk about it all the time. I talk about it all the time now. You converted me as a VIX believer. And I do think that the VIX is not done yet. I'm seeing more people fly into the SVIX and SVIXy trade. Let me pull up the SVIX real quick. This is a one-time short on the VIX itself. You got a death cross. Oh, I got to do it. We haven't done it in quite some time. Yeah, so we got a death cross there. And could we get a bounce off of this and get rejected at the 50, 200 right in that range? It's very possible. But there's a lot of people that are betting on this, and we're seeing the volume drop down significantly. Does that mean that, people are taking the other side of the trade? Sure, some are. But there's a lot of people who still are betting against volatility. They think that, and again, this is probably more hedge funds and retail they're doing as opposed to like some banking institutions. We don't know that, though. We could find out in the next 6 months. Banks fucked up just as much as retail did. But because this is easy money, obviously it's going up, 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 up. And look at this for the first time since, April of 2022, it dropped significantly. The bigger one that we should talk about, which is the one I'm always short. I'm short the people who are short the VIX, but through this ETF, which is the SVIXy. Look at this major dump that we had with the carry trade. It dropped from 64 all the way down to 38. I took profit right here around 39, I believe. And then it started going up again. Now we're finding resistance on the 200 moving average. Haven't even touched the 50 moving average. The question is, with the yen carry trade still at hand, people leveraged more after that dump. Are we not going to see the same thing happen again? And if that case, what breaks and that causes more of a fire sale to happen throughout the equity markets? I'm very concerned for anyone who is in this trade because this might cause even more margin calls one morning. And again, I do believe that this market's going to go, limit down morning. It's going to be when you least expect it. If you're within a trading session and the market goes down, I don't necessarily know if that's going to make the market move as much as it would if, the market's just opened down 300, 400 points lower or something like that. When you're in a trading session, there's so many things that could just absolutely change the outcome. It's more of just like, we sold when you guys were sleeping and now the market's a lot fucking lower. I think that's going to catch a lot of people off guard, and we're going to be witnessing it possibly in the coming weeks. If this doesn't, we're not able to get above that, I'm pretty confident in saying, maybe some of the puts that I bought on this might be in more profits. And again, you're trading from an ascending triangle. You did the same thing back here in 2019 into 2020. I'm not saying that that's going to happen the same way again, but then we also know that when a lot of volume comes in at a short period of time, look at Volmageddon. Look what happens. It just drops off. It goes from $278 one night to, 3 days later being at about $20 per share in this ETF. So that is the unwind of Nvidia, the yen, the S&P, and maybe even all the other tech stocks that start to sell off. That's the fear. That's the concern that we have right now.
All right. I think, man, there are people who have been kind of waiting and are probably jumping in now. I don't know if it's a little too late or what to expect, but this is why I think for the vast majority of people, just having your recurring buys is the way to go.
I hear the weird part.
Yeah, go ahead.
A lot of people I always say it's not bad to have cash on hand because then you can make plays. You can play this market in either direction that you want. It's always good to have cash on hand because then you can also buy the dip and do less work when there is an actual dip to buy. The dollar right now is right around 100. People are saying that with the rate cuts coming, the dollar is going to sink below that. However, the dollar keeps getting weaker, the yen keeps getting stronger, and then that's going to cause the equity markets to flip, and then that could cause margin calls and financial crisis to the point where the dollar could absolutely do the exact opposite what people are expecting and start going up towards 120 again. It's really funny to see how this is going to be like. As soon as the switch is flipped, you're going to realize it and be like, oh my goodness, everything that we thought we knew. So that's margin calling. But yeah.
All right. What all is happening? Anything in the markets next week that looks interesting? I think we should be getting a PCE report. I believe, PCE is on Friday. So next week could be fun. We have Nvidia earnings on Wednesday. On Thursday, we get the final reading of Q2 GDP or second revision of Q2 GDP. How is that going to look? And then on Friday, we get personal income, personal spending, PCE, core PCE. Is that going to throw a wrench in anything? Are they going to have to dude, Friday, if core PCE or PCE comes in over expectation, the markets are going to just absolutely get obliterated.
So they need to be, that's a very scary thing.
Yeah, so much. I'm watching, crypto pump right now. Bitcoin is approaching 64K. Solana is just under 150. It looks like it wants to try to break through that. Meme coins are pumping right now. Everything is set up to go to the moon, but it feels like what has to happen for that is not as likely as what's going to happen to bring things back down to earth.
I will say this. You need to question the narrative sometimes too, right? Because I think that a lot of this now is narrative driven. It's also monetary system driven. Nvidia earnings are Wednesday, right? So maybe it's very possible things could pump into Wednesday, right? But then look at the second half of the week. You have nothing the first half of the week. Durable goods, okay, whatever, right? S&P Schiller Home Price Index 20 cities, consumer confidence. No one gives a shit about consumer confidence. But then you got initial jobless claims, which they talked about the labor market, getting worse. It's something that they're concerned about. You have GDP second revision. What if they revise it down, right? And then you got PCE, core PCE. That's a heavy back end of the weekend after some pretty noteworthy equity market data regarding one of the top companies, at one point one of the wealthiest companies in the world.
Still the wealthiest companies in the world.
Yeah, behind is it Saudi Aramco and then Apple, the two in front of it, or is Microsoft up there now too?
Microsoft is still up there.
Gotcha. Yeah, so that's a heavy week at the end. So it's very possible things could stay elevated until Wednesday, but then Thursday, Friday, what happens if things start to turn worse? What if the yen gets worse? And that it kind of sets it up for like, okay, maybe people are getting a little scared from next week, Friday. Markets kind of sell off. You don't know. We don't know exactly what's going to happen. But then what happens, on the long weekend after Labor Day? What happens that Tuesday morning? I don't know if Japan celebrates Labor Day. I don't think they do. Not the same time as we do.
I have one request, and if they're gonna do another Sunday crash, can it happen one of the next 2 Sundays before football season comes back? I don't have the bandwidth to follow the Japanese market and professional football. Okay. And I'm going to choose football every time. So if they're going to do it, just get it over with. I'm tired of waiting.
Oh, there is no choice other than to crash the markets if this yen carry trade gets worse. I know I'm talking so much about it. I feel like a pig in shit right now, just talking about something that's so important.
Yeah, we were talking about it way before it was on everyone else's radar. Like,
sure, but
a few,
still,
3 weeks ago, people finally were paying attention to what it meant, and you've been talking about it for months, so it's fine.
All right, last thing I want to show you guys, because it does come back to the banks, and I do think that the banks are also going to be in a bad place very soon. Why? I just have an idea that, the fact that TD Ameritrade just dumped pretty much all of its shares, I think at a $2.6 billion loss of Charles Schwab. Why are they going after Schwab? Why is Schwab the one that's down 5% at some post markets, and then as soon as the market opens, they buy it back up? Well, if we remember the chart that we saw from Best Evidence, John Titus, who he pretty much put everything into an Excel spreadsheet, and we showed it last year. It said that the amount of FHLB loan operating as percentage of equity of the 5 top ones, there was only 2 that hadn't collapsed. What were they? USAA Federal Savings, which was number 4, and number 2, Charles fucking Schwab. They messed up buying treasury bills with consumers' money, or I guess their customers' money, when they became a custodian, pretty much a bank, and they're continuing to be in a lot of pain. But looking at this chart right here, I mean, there's 2 things that could happen, right? I put a bull and a bear case here. It's a parallel channel within a parallel channel going opposite directions. That's some type of fucking cross that I haven't invented yet, but there it is on the chart right now. You have this trading within this channel. You're finding resistance on this intersecting parallel channel to the downside, which tells me that, okay, maybe like $33 or so is very possible. And you're within a parallel channel going to the upside, which tells me that this is probably going to hold resistance within this. And you could lose this parallel channel, but you could take us to at least $44 or break below that a little bit. So that $33 for Schwab is very possible. Now, the question is, does Schwab survive? If it does, then, that bottom parallel channel is probably going to bottom out, bear market. Maybe it finds some ground there. But if it doesn't, then this thing's probably going a lot lower than this parallel channel. And this thing's just bullshit that I put here. And we're looking at somewhere, south of $28 a share. You're probably going to be somewhere we haven't seen for quite some time. That's if it survives. Maybe someone buys it out. Maybe it becomes an OTC stock. Who knows? But the problem is, if a bank like this goes down, and we saw what happened with First Republic, Signature, what was the other one? Silicon Valley.
Mm-hmm.
If that's the case, that's the same thing that happens here. Is the contagion going to get worse? We're seeing Wells Fargo get out of the commercial real estate market. There was a building that just sold for $12 a square foot. I think it was like $4 million that it sold for in San Francisco. Like, we're seeing these unwinds kind of happening, but it's not going to hit until it all hits at one time. I think the carry trade is the one that's going to kind of lift the veil on that. So keep an eye on the banks as well. That's going to be very fun in September, I would assume.
All right. That is going to wrap it up for today. We'll be back on Monday to look at what is going to be an exciting week ahead. Should, I hope, have our regular schedule next week, Monday, Wednesday, Friday. It's going to be a good one. So enjoy your weekend. Stay safe in the markets. Don't overextend yourselves, and we'll see you next time.
Take care, everyone. Be safe.